What's up, Trader's Edge? It's your only option, Mark Sebastian, and this is your midweek update. Today, we're going to talk about the two earnings I'm still watching very closely. We're going to update you on what's going on with the chips and the mega caps. We're going to talk a little bit about the S&P and where that's going next, the Qs, the Russell 2000. I'm going to hit on the VIX, which expired this morning, and we'll talk about any other stocks I'm watching this week. But before that, I want to remind you that you need to join my special presentation tomorrow. It's Thursday, 8 p.m. Eastern Time. Everyone who attends live and stays through the end will get a free invite to attend a special 90-minute session I'm doing on trading spreads next Tuesday. You won't want to miss it. You come to the webinar and you get a free class as well. Really can't beat that as a offer. I implore you to join me. All right, let's get down to business. What did I tell you that the S&P was underpricing the movement for CPI? Yeah, I think I was pretty right there. Now, because we were down as much as 95 points, I believe. Look at the high-low swing in the market over the last 3 days. We reached a high of 50.48 and a low of 49.20. We had a 130-point range in 2 days, folks, and they successively were willing to give us the at-the-money straddle for like $34. Premiums in near-dated options are too cheap. Repeat after me. Premiums in near-dated options are too cheap. All right, so that's what we're seeing in SPX. Today, a little bit of a recovery. Still feels a little rickety. I've been watching the market kind of bounce around. And again, I think this feels a little rickety. My take for Wednesday is we're going to close probably green, but below where we are right now. I put out a 0 DTE trade that is a little bit bearish, but I also have a 3-day hedge over the top of it in case I'm wrong and the market does go parabolic. Because if I'm wrong, then the S&P will close on Wednesday near 5,000. That's what I mean by if I'm wrong. I don't think I am, but we'll see. All right, now looking at the other indexes, the Qs are having a strong day, not significantly stronger than the S&P, but where we're seeing some weakness is in Apple, which is testing that 200-day moving average. That is really key. Apple has basically not closed below the 200-day moving average since October 31st. So if we close below here, could be very interesting. Could be very interesting for Apple. The other kind of major names are all higher in the Magnificent Seven. Meta moving up about $10. Microsoft mildly higher. Nvidia, shocker, Nvidia's higher. So we're seeing just those names continue to rally. And that is pretty interesting. I don't know that we're going to see Nvidia move a lot higher out of earnings, but who knows? All right, now let's talk about these two earnings I'm watching. Applied Materials, they report tomorrow after the bell. This is kind of the last big company. I really want to see what they have to say. They're pricing at about a 5% move. That's above normal. Obviously, Applied Materials has been moving around a lot. So it'll be very interesting to see how this one plays out. The other one that's interesting, they're after the market tomorrow, as well as DraftKings. They're looking for a 12% move. Normal is about a little less than 10. So we're talking about some expectations for some fireworks in DraftKings, and rightly so. The stock has had a really nice run. I would not be surprised to see them report some good earnings and still get clipped a little bit after the run they've had. Now, small caps. They are having themselves a day after having themselves a terrible day on Wednesday. Nice little rebound. This 200 level seems to be a level it's not able to cross. If we can get a couple successive days above 200, maybe it gets some a little bit of some head of steam. MDY, kind of the same story. I keep waiting for it to make a serious run at 520. It might. Last but not least is RSP. It did hit a new all-time high. It's still kind of in this range, though. I'm looking for that. If the market's going to continue to move higher, RSP is going to bust higher. Just plain and simple. So this is one that I continue to kind of keep an eye on. It's been able to hold the 21-day, but I'd like to see the rest of the S&P start to play some catch-up. Let's take a brief look at oil, which kind of hit my target and is now selling off a little bit. I think it's probably going to converge back to the 21, but it looks like it's in a bullish setup. So I like the oil names here. That would be bullish RSP. And then in the shiny stuff, gold, again, it is just you're getting a doji on Wednesday. We're green tomorrow, might be worth a little bit of a short-term long, but I don't like this one long-term. And I'm not so certain that it's going to be off to the races for that one. So there's kind of everything I'm seeing in the market. Let's close with VIX. The futures term structure is just incredibly flat. Feb expired. March is only trading 15.20, 60 cents above the cash. So we're not out of the woods. This market is pricing for some sort of wild move. All right. We're going to get a multi-standard deviation move similar to what we saw on Wednesday in the next few days. It is coming. So how do I play that? Again, I think you want to own strangles and straddles. They're consistently underpriced. Friday is options expiration, which always brings a little bit of interestingness to it. The Friday 49.85 straddle is less than $40. That is a trade I can make money on, folks. That is way too inexpensive. It's one that I'm probably going to dive into myself. All right, folks. Again, I want you to join me on Thursday. If you have questions, give my team a call, 888-872-3301. I am Mark Sebastian, your only option. I hope you have a great rest of your week. I'll be back with a little bit of written content tomorrow, and I will see you on Friday with my weekend review. Have a good one.